Hello, everyone, and a very warm welcome to this week's review for Saturday, September the 2nd, 2023 on the US major markets. So are the stock market bulls back? It starts to look like it, and the bears might need to hibernate for maybe a little bit while longer before we get a pullback and then possible rally to 4,800 on the S&P 500 and about 16,650 is on the NASDAQ 100. Yes, this is now turning into that wave count. Remember, all the way back into July, we were wondering if the B wave had topped or if we would subdivide into the red 3, 4, and 5. So nothing out of the ordinary. Yes, we preferred the B wave because we had attained the upside targets already set forth October last year, if not even before that. But we must always have a flexible and open mind to know that it is not set in stone, and we had to see 5 larger waves lower. That what we're tracking, you can count it as like 5 smaller waves lower, but not 5 larger waves. That is the minimum requirement to know that the B wave had topped. Haven't seen it yet, and instead got key overlap with key price levels, suggesting that we're not going to see 5 waves lower. At the best, a bigger ABC lower. Okay, so this has been the wave count we have been tracking since October last year. In black are the preferred paths lines, and in blue here the target zones. We've reached it, so far nothing out of the ordinary. Okay, when we start to surpass these target zones, we must concede that there might be something else going on that we haven't yet fully taken into consideration. But again, nothing out of the ordinary just yet. We've been looking for these targets since October. So all the upside targets have been reached. Now the question is, can we still reach a little bit higher to that 5,000 target? I've shared this chart with you before. This is now the bullish wave count, where we have this fantastic 200% overlap for the major degree wave and the intermediate of the major degree wave. That would be the intermediate 5 of major 5. And this would be then the 200% extension of major 1 from major 2. 5,034. This means we'll be on our way to 4,800. We'll drop back to about current levels, maybe a little bit lower, somewhere thereabouts. And then we'll get our final last rally into 5,000. And that would conclude our wave count. Some people count this as first wave, this as a second wave, and now we're in the starting gauge of a third wave. I haven't seen it yet, and if this indeed is a larger third wave, considering where we are in time, it's almost been a year, I would really think that we would have surpassed the all-time highs by now. This is taking a little bit too long for it to be a massive third wave of this degree. I would think we would be much further along. Look, for example, here, we dropped about 50%, I believe it was, or something like that, 30, 40% on the S&P 500. And we got it all back within a year. Okay. So far, that has not happened on any of the indexes, especially not on the small caps, for example, we've been severely lacking. And in a bull market, especially a raging larger third wave, I want to see all these indexes participate, and that's certainly not the case. So if this indeed is a third wave, it is a smaller degree third wave, not of, I would say, a major degree, but only of an intermediate degree. Okay, so that's at least 1 degree lower. So please keep that in mind. This is not my preferred wave count, that this is a 1, this is a 2, and now in a massive third wave, which is going to target somewhere around, that would be 5,000 plus into the 8,000s. I just don't see it happen. All right, that is not my preferred wave count. I have never ever got that on the slides, so please keep that in mind. So the bottom line from last week was that as long as we hold the low from the week before last week, we're going to look higher. We must look higher. Nothing says maybe or something. We must look higher. Okay, a rally to 4,800 to 16,665 on the NDX, and we should at the minimum expect a bounce to 4,500 plus or minus 25. And 15,600 plus or minus 200 for the NASDAQ 100. Okay, those are the shorter term wave counts we've been tracking. And on Friday, we got as high as 45.41. for the S&P 500, and on the NASDAQ 100, we got to as high as 15,618. Bingo, my name is Bingo. So far, so good. So now we are going to see if we indeed going to get a impulse higher, yes or no. 5 waves. Okay. The differences were the C wave of a larger fourth wave or the third wave of a major one of primary C. All right. That's what the two things that we're looking for this bounce. And again, after 3 waves down, we expect always at least 3 waves back up. So the bounce is, of course, the 3 waves back up, and the new rally to 4,800 impulse. This week, based on the evidence, okay, because all we do is prognosticate, right? We prognosticate the markets. We're using the available evidence to make a forecast on what we're going to expect. It's nothing different from weather forecasting. You prognosticate the weather based on all the evidence that is available on barometric pressures, where the high pressure systems, where low pressure systems, what is the wind doing, what is the temperature doing, etc., etc., etc. So this week we found, and we've had this on the map or in our updates every single day, as long as we hold 4465 on the S&P 500 and 15,240 on the NASDAQ 100, we are increasing the odds that we're in an impulse. We trade below it, it increases the odds that all we got was a bounce, because then we are dealing with 3 waves up, right? We're tracking this Fibonacci-based impulse pattern. When we start moving below certain key Fibonacci levels, this impulse pattern falls apart. Then it increases the odds it is not an impulse going to be anymore. When the impulse starts, we don't know if it's going to be an impulse with certainty. So that's why we label 1, 2, question mark 3, 4, and 5. All right. At the minimum, we get 3 waves up, then question mark 4 and 5. Are we going to get the 4 and the 5? Are we going to get the minute 4, minute 5? Are we going to get the minor 4, minor 5, etc.? That is continuously how we assess the markets. We don't know if we're going to get those levels, okay, and those waves. We must remain objective. Most likely, yes, it's your preferred point of view, but that doesn't mean that we know it for certain. The preferred point of view is that today is sunny, but there's always a chance of a cloud passing by the sun. Now, moving on to other indexes, the IWM overlapped with key levels as well, which was a potential first wave lower. That means we have no impulse lower into the recent lows. That means we're going to look for higher prices. I already shared you that updated wave count earlier this week. So again, my premium members are, as usual, ahead of the curve, and everybody who's watching this is behind the curve. Now, you can decide if that's worth paying some money for to be ahead of the curve or not. If you remember that you get what you pay for, you pay nothing, you get nothing. Semiconductors are still lagging. The Dow Jones can be forming an ending diagonal on a larger time frame, where the recent 5 waves lower, they still stand in the books, were part of a 5 correction, not 4, of a flat 4th wave. I'll deal with that in a moment. BREF is improving. We have now buy signals, confirmed buy signals. I am going to share with you my improved buy all, sell all indicator. And again, seasonality is bullish until mid-September on various measures, different ways of tracking seasonality. All right, so that is the bottom line. Let's go to the charts, right? The devil is always in the details. So here we have the NASDAQ 100 hourly chart, and I think we can clearly see only 3 waves lower, A, B, C. So red 3, red 4, and we should now be in an impulse. We're tracking this 3rd wave higher. This was the path we laid out earlier last week. We would go here, we would go here, we would go here. So far, so good. Looks like we have a little bit of a subdividing gray wave 3 going on. Not necessarily, but looks pretty good. We haven't had to change the labels not much. Pretty much been right on the money based on the Fibonacci extension. So this would then be 1 of 5 of 3. This would then be 2. And remember, if this is a new bull market, the downside will disappoint, and this 4th wave might not extend to the fullest potential. Okay, it doesn't have to go all the way down to 15,300. For all I care, we have technically done enough with this 3-hour decline on Friday, and that would then be 5 of 5 of 3. Okay, so as long as we hold here above about 15,250, I think we're good to go somewhere around there. Okay, we don't want to see it go any lower, and I'll show you that why if I would do that like this. So here, there, that would get us below about the 76% retrace, which is not very common for a fourth wave of this degree. So the fourth wave should hold there. See that? This is where we expect the fourth wave to top. Okay, and this is where we expect this third wave to top. Okay, this is where we expect that third wave to top. Where does that third wave normally top? There. Why? Because it's 138 to 161.8. Okay, so that is on my website, intelligentinvesting.market. Go to menu, click on education, go to edit wave principle, and here is your ideal Fibonacci based impulse pattern. So 3 of 3 is to 100 to 123.6%. Okay, so that's exactly what we had here. So that extend this a little bit there. So that's what we got so far. It's pretty much picture perfect, right? Then this wave 4 goes to the 100 to 76.4. Let's see. There you go. Maybe even the 61.8, but I don't want to go that low. So you could say, well, maybe it's going to go this way. Excuse me. That is fine as well. I am okay with this, but that's why I don't want to see it go below that level. And then this is going to be wave 5. So we expect wave 4 to bottom somewhere around here. And we can also do a simple, of course, 38.2 to 23.6% retrace, as you can see, of, let's see here, this third wave, the length of this third wave, which gets us, as you can see, right there. Okay, so this is another way of looking at where should we ideally top and bottom for third, fourth, and fifth waves. Okay, and that is then our third wave target zone. So we're going to leave it on here in green. So for all of you to see, again, the decline here to late August is exactly 76.4%. It's quite deep, but nothing unusual. And this is then our Fib-based impulse pattern, right? So we get 3, and then of course we're going to get 4, question mark. We don't know yet if we're going to get 4. Somewhere to about here. And then, of course, we're going to get wave 5 to about 176.4 to 200%. Unfortunately, the stock chart doesn't allow me to put that on the map, but you get the idea, right? Then we get something, oops, not horizontal line, trend line, something like this. And you will see that path also on the S&P 500 chart, which I will share with you momentarily. Okay, so that is what we are looking for. So this is so far, so good. And again, we don't have to go all the way to this level, right? We don't have to. But again, as I said in last week's updates for my premium members, the longer we continue to follow a Fibonacci-based impulse pattern, the more likely it is that it is a Fibonacci-based impulse pattern, okay? But we haven't seen 5 green waves up yet. And this is our framework, 3, 4, and 5. So far, so good. We topped where we had to, and we haven't even bottomed yet where we had to, so we don't have to. That brings us then to the alternative wave count, in that we are in a larger B wave of either or first wave. Right? So this was an impulse. I don't like it because this 3, 4 is completely out of proportion with this 1, 2 in both time and price. And we do want to see some proportionality and symmetry. It doesn't have to, of course, but it would be quite normal to expect. Then we still label this as 3/B and this A/1. Why? Because we don't know if we are still in a larger fourth wave or have an A, a B, and a C. As I mentioned before, 3 waves down or 5 waves down can always become something larger, like a 5-3-5. Okay? The market reserves the right to turn a smaller correction into a larger correction, as long as we remain within certain parameters and not overlap with certain price levels. Okay, please always keep that in mind. So then we are also here completing this wave 3, 4, and 5. Even a C wave is 9 out of 10 times 5 waves, so expect a little bit higher here as well. This is also based on ideal Fibonacci-based impulse patterns. Again, so 15,240 needs to hold. Okay, and here we, for example, are using 1, 2 set up here. So this is wave 1 of C. And then, of course, the low there was wave 2 of C. There, right? So we should have stopped here for wave 3. Okay, not too bad. Wave 4 can still go a little bit lower. As you can see, target zone. And then we should top out somewhere around there in the 15,650, 15,700 level. Okay, so that is then our B/2. And then the market can decide based on new information that becomes available if it decides that, okay, well, that was only a B/2 or we are going to get a impulse. And again, see this C wave fits nicely there with the wave 5 as well. That's the 176.4% extension. So I'm going to add that here. So this is our wave 3 ideal target zone, right? Remember? Wave 3, 138.2, 161.8. And we have that here, 161. And there, this is the wave 4. Okay. That would be this wave 4 here. I know the nomenclature is off by one label, but we're working with a smaller degree. And then the wave 5, 176.42. That's the ideal Fibonacci-based impulse pattern. And then the C wave, again, should be somewhere either between 100% times the length of A or up to 161.8. But the more it becomes closer to 161.8, the more likely it is that it is a third wave, right? So this is what I'm going to look for. I'm not going to look there. This should then match. All right. So we're not completely out of the woods yet. I think over the next few days to weeks, we should know if we're going to get the impulse higher or not. Are we going to get 5 waves up, or are we only going to get 3 waves up? Okay, to be determined. Can't decide just yet. However, we're going to take a look at the hourly chart. Excuse me. Take a sip of coffee. So I stay fully caffeinated and slack in that department. And we are going to annotate and adjust this wave count. This was our cutoff for an impulse. So this was the potential 4. Okay, this was the potential 3. Similarly, here we were tracking potential 4, potential 5. Okay, potential 4, potential 5. You don't know. We don't know. We are going to track it. Nobody knows if it's going to happen, right? We can easily go into this. Then we will get this ABC. I mean, I can put a lot of explicits here, you know, it starts with F, with a K. How would you know? Nobody knows for certain. But if we start to follow it, you bet you we're going to get a different outcome. What we do know is that we didn't get the impulse lower. 15,365. We were tracking here for potential 3, potential 4. This down day, we were still safe, or the bears were safe. Well, forget about it. The 5th wave didn't appear. The 5th wave didn't appear. Okay, so we take it all the way. We know we bottomed here in this ideal wave 4 target zone. No 4th wave here either. Overlap, take it off the table, take this off the table, and we take this off the table as well. Okay, so I'm going to do this 3. This is then going to be A. This is now our preferred wave count. Okay, B. And all we got here was C of 4. Okay, with, of course, the reservation that it is potentially only A of 4. Right? A, B, C, and this 4th wave is going to get larger. So then we say, well, we have a reservation. This is then our alternative wave count. But it certainly wasn't the larger B wave top, okay? Because we did not get 5 waves lower. Oh, sorry. This is then the alternative A, right? And this is then going to be the alternative B somewhere here, okay? Something like this. We can still make a larger 4th wave. Okay, this is alternative B. And then we're going to do alternative C one more time, and we're going to go somewhere here. Okay. And then we're going to get this. We don't know yet. So this is the wavefront we're tracking here. A, B, C in red would then be A, B, C in green. Okay. Don't know yet. So this is going to be 1. This is going to be 2. And now we're going to see if we're going to blast past, if we're going to get 5 or C. And we're going to start then the whole process over again. Okay, is this then a B wave? Because all we got from October lows were then 3 larger waves higher, A, B, C. Okay, so that's how we're going to move over time. Or are we going to see a final impulse? Are we going to see a 4, somewhere to around here, and then a 5, and that will be the end of the bull market? More about that using the S&P 500. Okay, don't know it just yet. So this is the A, the B, and the C. Remember, after 3 waves down, always expect at least 3 waves back up. If we're going to see 5 waves up, then we know we're going to go to 16,675-ish, which we already have here on there, right, on the chart. Why are we going to go there? Well, quite simply put, it's a nice 5-1 relationship there. So this is where we're going to go, somewhere around there. So this has it almost at 16,850. That's why we say, okay, I'm going to put here the 123.6% extension right there, which I believe is somewhere close to, let's put that on the map for you real quick, there. That is the 200%, and this is the 123.6. 123.6 is 223.60%. Extension is at 16,662.52 according to this chart. Sometimes I call them maps because honestly they're just maps for price. So somewhere there, let's put it on the map, on the chart right there. But we can go a little bit higher even. Okay, it all depends on what Fibonacci extension this 5th wave will take. Sometimes the 5th wave is 61.8% the length of wave 3. So that would bring us even higher to 17,000. Okay, even higher, all the way there. But I think we have here a good initial target that we can work with. Okay, is this then going to be wave 5? Somewhere around that, a little bit higher, right? 5-1 relationship. Okay, very possible to be determined. And again, we'll then subdivide 1, 2, 3, 4, and 5. Okay, don't know it just yet. There, or are we going to get 4 and are we 5? So this is what we're dealing with. Preferred wave count is 3, 4, 5. That's our preferred wave count. Okay. Alternatively, A, B, C. Okay. I cannot make this a B wave top anymore because all we got was 3 waves lower. That's not the start of a C wave. C waves are 5 waves. 5 waves are made up of 5 smaller waves. Wave 1 of 5 is 5 waves, etc. So I have a very hard time turning this into a B wave top. So our preferred wave count is now, this is 3, this is 4, and we're now working our way on wave 5, with the alternative being A, B, C. Okay. How do we know wave C? Well, we don't know exactly yet where wave B is going to top. But, I think we got an idea of around 15,700. Okay. So if you get 15,700, somewhere around there. Somewhere around there. So then we should expect, of course, something like this. Okay. Makes sense. This is a nice, normal 4th wave target. So, and then we'll start the whole process again for this wave 5. But that's the alternative. Okay. That is the alternative wave count. Preferred is ABC for wave 4. We're now going to work our way to 16,675, potentially a little bit higher. Same here for the regular NASDAQ. This was the wave count we were tracking. Also, the regular NASDAQ has now overlapped with 13,990. All right, so let's then work on the chart. All right, we worked on the chart. This is done. This is done. We did not get our 5 waves lower. Okay, so this is off the table. This is what we were tracking. Boom. And then this was then wave C. And this is then our preferred wave count. This is wave B. This is wave A. Okay. And this B wave will then go there. Okay, that has been there all the time as a potential B wave. And we are now in this potential 5 with, of course, the knowledge that this is potentially, again, only a bounce of a much larger fourth wave. This is our alternative, okay? This is our alternative. Can't state it often enough. And this is our alternative. But again, even the bounce, as I said last Friday, we must look higher. And that's what we got. And this is then our alternative. And we're going to look for, oh, sorry, wrong tool, for something along these lines there. And this is where we're going to expect for somewhere to bottom. Okay. It is still possible. Again, it is not my preferred wave count. Something like this, and then we'll start the whole process over again. And this will move us, as you can see here, nicely into the 15,100 target zone. So this is then wave one. Oh, not IU. I don't owe you. And then we'll see if we're going to get 3, 4, and 5, similar to the NASDAQ. So let's put in a nice 5:1 relationship here, right there, and see where that gets us, right there. Not too bad. Look at that. Very close to the 200% extension. Okay. And then we'll see if that is indeed a third wave. And there's B. And alternative, so then we only got 3 waves up, right? Is then that we have topped. Or similarly for the NASDAQ 100, if we're going to see a 4 and another 5. I can't say with 100% certainty which it is, but for now we don't have to worry too much about these 4s and 5s just yet. We'll worry with it when we get there. Then we'll simply redo the whole process again. Are we going to see 5 waves lower from here or 3? We see 3 waves lower, we're going to get the next 5. Are we going to see 5 waves lower? We're tops, and we're going to see a larger crash eventually happen. Okay, that's the whole process that there is to it. I still have a very hard time seeing this as a first wave, but hey, weirder things have happened, and maybe we can turn it into 5 waves somehow, somewhere. I just don't see it just yet, but that's okay. We'll get there when we get there. For now, preferred wave count, we're in wave 5, alternative A, B, C, and then wave 5. Why is this not a B wave top? Because we only did 3 waves lower, and we must see 5 waves lower. In my humble opinion, this looks much better as 3 waves lower and not 5. I can count it as 5, but it's not very clean. It doesn't match with the daily chart, meaning the hourly chart doesn't match with the daily chart. So here is then the Dow Jones we're tracking. This looks pretty good for 5 waves lower with a picture perfect 5:1 relationship. Okay, so far so good. This was the alt wave count. Well, the alt wave count we can of course take off the table, and we've stopped here right here at the B is 2. So this has so far progressed quite nicely. This was on the map all the time, so that was pretty easy money. However, it looks like 5 waves up. 1, 2, 3, 4, 5. So I prefer to look at this way. Then the wave 3 top wasn't made here, but pretty much a day or 2 before. A, B, C, 5 waves lower. So this is now 4. 1, 2, 3, 4, 5. So far, so good. Okay. I might be off by 1 wave degree, but this looks pretty good. As I mentioned in earlier updates for my paying members, that if we see another higher high, this will start to look much more like an impulse. Then we have to concede that we are dealing with a ending diagonal wave 5, C wave, sorry, and that we're now in this wave 5. Okay, targeting as high as ideally 37,000 plus for the Dow Jones. Okay, should we take the market step by step, day by day? So here we have then wave 3, A, B, C, 1, 2, 3, 4, 5, 4, 5 of CO4, and we're now working our way higher to this target zone. And a nice CSA relationship is right there at 37,250-ish. So which matches picture perfect with 161.8% extension, which is a typical 5th wave target for a diagonal. So this is then 1, this is 2, this is 3, ABC lower for 4. 4 overlaps with 1, and we're back above the 50-day. Remember, I said during the week that as long as we stay above the 50-day moving average, we're good. And of course, the floor remains the low here made, I believe, August what is it, 24 or 18, whatever it is. Let's have a look. Sometimes I don't know the dates. This was 25 on the Dow Jones. Regardless, this is now the preferred wave count. The alternative, it being a B wave, okay? The floor is now 34,000 on the Dow Jones. Semiconductors are still lagging. This still looks better like an ABC up. Well, we'll have to track this one. I'm not so convinced about this one just yet. I need to see more price data. It still looks like ABC up, ABC down, and now probably on 5 waves higher for this one. Okay. All right, moving on to the S&P 500. Red 3 here in July, red 4 here in August. 1, 2, 3, 4, and 5. This is the potential impulse pattern we are tracking. We need to place, of course, a question mark there and a question mark there, just as we did for the NASDAQ 100. And the same here with this one, all right? We don't know just yet. I think we will. And we've reached the target zone, okay? Hasn't changed. This was the target zone. And we've been kind of flip-flopping around it quite nicely. This is wave 5, 3, 4, and 5. Doesn't have to go that high. Something like this. Let's do a, well, maybe it's going to go that high. 5 is 1 relationship. So somewhere along this is where we then expect wave 5 to top. Somewhere around there. All right. Somewhere around there is where we expect this wave 5 to top. So if this is then a 5-wave advance, maybe we can then upgrade it or downgrade it to only first wave of this red wave 5. We're going to look here for a decline and then 3, 4, and 5. Okay. Alternatively, this is indeed A, B, C, and we've already potentially topped for this wave 5. We must hold 44.65, which is the 61.8% retrace based on this ideal Fibonacci-based impulse pattern. Okay, that's why we put the 44.65 on the map. Okay, we need to hold that. If we drop below it, odds start to increase that this impulse pattern we're tracking is falling apart and is not an impulse pattern. That's why we have that line instead. It increases the odds the impulse pattern is falling apart. So I prefer to bottom here somewhere around 4,500, 44.80. Below 44.80 already starts to increase the odds that this is falling apart. Below 44.65 increases even more. I want to see the market hold that level and then rally for 3, potential 4 and 5. Okay, if not, then we are indeed dealing with this bounce. And then we are indeed dealing with this potential ABC higher. So here's the daily chart. We're going to do the same job as we did for the NASDAQ and NASDAQ 100. Okay, so this is then wave A. This is then wave B. Okay, 3 waves lower. So this means it's not a B wave high anymore. And remember, B waves in the past, 2020, 2016, I believe, 2007, 1970s, have all been irregular. So meaning they go past the all-time high. So we've gone above 44.43. We've gone above 44.28. Last line of descent is, of course, 46.07. So then we have our preferred wave count as this being wave 4. And of course, the alternative wave count is being wave A of 4. Okay. Remember, we got very close to the ideal target zone here. This is A of 4. And this is going to be B of 4. Somewhere around there, right? This is then the preferred wave count, 1, 2, 3, 4, 5, which we could maybe make into, sorry, a larger 1, a larger 2, a larger 3, a larger 4. And alternative, this is a B wave. I don't think it's much of a first wave anymore, but we'll keep it on there just in case. And then we'll get somewhere like another C wave lower. It is still very possible. Okay, so we're going to top somewhere here for this B wave, and then we're going to see wave C here. Okay, somewhere around there. Not much below the August 18 lows, by the way. Because it was above 46.07. I'm going to look here from 47. 90s to 4800. And then, of course, we're going to see if this is indeed all of wave B or not. So we'll label this as 1, 2, 3, 4, 5. And I'll show you in a minute how we can maybe wave count it slightly different. It's okay. And then we're going to do this whole process all over again, just as I mentioned for the NASDAQ 100. Okay, so the preferred wave count is we're going to go to 4800. The alternative wave count is we're going to top out here soon. It's about 44, 4550, 4575-ish. Okay, somewhere around there. Right, somewhere around there. Getting very close already for a last potential fifth wave high. I can already count this complete the bounce. It doesn't look too great based on the ideal Fibonacci-based impulse pattern. And we're going to expect that lower price levels, this C wave, on a break below 44.65. Okay. And then I'm going to look here for this larger fourth wave to take place. And then you can expect it to go there. Okay. That's the alternative wave count. We always must have an alternative ready just in case. This is the weekly chart that I shared with you before. So we have the 1, 2 setup, the 1, 2, 3, 4 setup. We're now in 5 to 4800. Right? That's the 200% of wave 1 measured from wave 2. It's 161.8% extension of wave 1 measured from wave 2. Fantastic overlap within $2. Okay, so that will get us a very nice and close indeed to get there. Okay, I like it. So this is a slightly different wave count. We will get there. That is what we're going to look for. And then a pullback and then a rally to that 5034.24 level, as I mentioned in the beginning of my webcast. So here's the IWM. Remember, on Thursday we came in spitting distance of this wave 1. We bottomed here, picture perfectly for this gray wave 5 of this 3. We were looking for a 4 and 5. That didn't happen. We have now overlapped with wave 1. That is not allowed, so this wave counts off the table, and we're going to have to look higher. We should now be wave 1, 2, 3, 4, and 5. CSA targets almost exactly 200% extension of wave 1, like this. Okay, so this looks pretty good. Then we have a more protracted blue B and a more protracted C wave. Again, this does not look like a raging bull market of a massive, large third wave that I alluded to at the beginning of my webcast, that some have asked about if this is indeed a larger third wave and not a B wave or something of that kind. The IWM does not confirm that case at all. At some point, a rising tide lifts all boats, and a third wave on a major degree will lift all boats and not just have this, go a little bit ebb and flow within 10% points. This does not look like a third wave in the overall market. All right, so those are the wave counts we're tracking. I hope you enjoyed seeing me working with the charts where we see this price overlap and how we now interpret the charts, okay? Potential impulse tracking and how that's going to look then on the bigger picture, okay? And why we're still looking then for higher prices, because we've had 3 waves lower, we must anticipate 3 waves back up. And we don't know yet if these are indeed 3 waves or an impulse. The longer the markets stay above these key invalidation levels and follow an impulse pattern. So when we now start to see, for example, this 4 materialize, this 5 materialize, it really starts to increase the odds that this 4 and 5 pattern will follow. Again, we'll then do the whole process all over again. We need to see, of course, a decline going below certain key levels, etc., etc. Not there just yet, but As I said in the beginning, the stock market pulls back. It starts to look like it. That's my message. Not out of the woods just yet. I have not seen 5 waves back up. I have seen what counts best as 3 waves lower on the daily time frame. And I do want to give that more weight than the hourly chart, because as you, for example, saw, the 5-minute chart already has much more often errors in interpreting the price action than an hourly chart, which has already less errors than the 5-minute chart, and the daily chart even less, because waves are best counted on longer time frames. The Elliott wave is designed to count waves on intermediate to long term, not on the 5-minute chart. It's doable, but again, the more scribbles there are, the more likely you're going to misinterpret a scribble. You misinterpret one scribble, that arrow is propagating itself all the way to the top. Okay, you miss one scribble, you say, well, that's not down 5 minutes, so it's not a wave, but it could be a significant move, and it is a wave. Every scribble is a wave in a sense. Except when we go very, very small time frames, then it becomes random. But randomness turns always into patterns eventually. That's the beauty of nature and our universe. But on a whole different level, this looks best as 3 waves lower. Expect 3 waves back up, potentially another 3 or 5 waves lower. Preferred wave count is we're on our way to 4,800. All right, that brings me to the new improved buy-sell indicator. I have added here a I would say moving average. It's not a MACD, but it is a strength indicator. And when we get a buy signal first, meaning the PMO buy all sell all indicator goes from 0 to above, right? We get a green candle, an open candle. And then the swinger, I would call it, also gives a buy signal from below 0. We have very good buy signals. Look here in October. Takes a little bit longer. So this is step 1. This is step 2. This is where you could say, I'm going to deploy 50%, and I'm going to add another 50%. Okay. That's something, for example, you could do. Same here in the beginning of 2023. Same here in March. Okay. And now, again, we have some other buy signals, but they're not as good, though they're good eventual runs, but we didn't go below 0. So again, no indicator works perfectly, but it does take some more of the noise out of the indicator. For example, this one is excluded. This one is excluded, okay? So that's a little bit better. And it's okay if we forego some signals. And all we do is bet on the high odds signals, right? If you get 10 signals and 8 are low odds, forego them. 2 are high odds. You go with those ones, and I bet you will do in the long run better than trying to bet on all of those. So we got a buy cross here as well, right? So we got a buy cross here as well, here as well, here as well. So this looks good, okay? So this has really taken the noise out of all these daily scribbles. That's what you want to do. You want to smooth things out. Just as we had a nice sell signal is, of course, the reverse. We got the initial sell signal on the indicator, and then the PMO buy all sell all indicator, and then this smoothing average momentum strength indicator also gives a sell signal. It's pretty good. Okay, it's just the reverse. So it increases the odds of having stronger signals, and this is a strong signal. This was a strong signal, strong signal, strong signal, suggesting that we are indeed on our way to 4,800. The buy signal has been in place since Thursday, and it got confirmed yesterday. Unfortunately, I can't get this intraday. It takes a couple of hours after the market closes before we get this, but so far so good. This is a nice signal. Doesn't mean prices will only go up, but it shows us we have a pretty strong signal. I hope you appreciate this noise reducing new buy sell indicator. Market breadth, McClellan oscillator for the S&P 500 is now positive. It has been positive most of the week. No real kickoff signal that we're in the hundreds, but we've bottomed very low in our buy zone. Below -100 is 9 out of 10 times a good buy signal. Doesn't work all the time, but eventually that will turn into a good buy signal. We didn't get the positive divergence that I was hoping for, though we did get that on the McClellan oscillator for NYSE, so that's good. And after the race has been, We don't have to get positive divergence. It would simply increase our analytical capabilities because positive divergence 9 out of 10 times leads to strong rallies. That means the summation index, which adds yesterday's McClellan oscillator reading to that the day before, which is added to that the day before that, etc., is almost on a buy. Again, remember the ebbs and flows of this indicator. When we get very overbought, we start to become topping because we have flooded for a while, and after the flood becomes, we will get a ebb. Again, for the sailors among us and the water world people, those are the tides that we look for in the markets, the short-term pulls and goes and forth of the markets, back and forth. And we had the ebb tide, we had the flood, ebb, very regular intervals. And it looks like we're now starting to flood again, right? That's what we're looking for. Again, when we are very low, ebbing a lot, it means that eventually we'll have to start looking forward to a flood. However long the flood is, we don't know. That's something else, but we do know this increases the odds that the downside is complete. How we're looking on the AD line, well, it's breaking back above this resistance here at 10,800 or 108,800. All right, it's back above it again. Okay, so we had a false breakout, maybe a false breakout. It's possible. And we might see higher prices. Okay. So far, still no bull market in this one. Last but not least, how we're doing on sentiment. Well, look where the Association of Active Investment Managers bottomed out right here at the lows. All right, it did so in March, it did so in October, it did so in September, it did so in June, it did so in May, it did so in February. Right, pretty close to very important lows. So this also suggests higher prices, way underinvested, way overinvested, way underinvested, the ebbs and flows of the market. Last but not least, seasonality. This is for the Dow Jones. We should expect a market top somewhere around September 8 to 9. All right, that would be, I think, let's see here, somewhere late next week, early the week after. For the S&P 500, same here, somewhere around the tip September 7, 8, okay? And other seasonality, this is from Equity Clock, also has a top a little bit later, but again, somewhere around mid-September. So it seems reasonable to expect a market top late next week, early week after. So that would be somewhere around next Friday, right, to maybe somewhere mid-September. So somewhere around, I would say, September 10, plus or minus 2 days, more towards the end of that than towards the beginning of that, something like that. September 10, I know that's a Sunday, but that's okay, plus or minus 2-3 days. That's where we're going to look for a market top, right? Bottom where we had to here as well. So far, so good. This seasonality is back on track. I showed you it was also for a while not on track. Okay, right, because we didn't get this continuous rally, but this looks pretty good for the S&P 500 as well. Slightest of dips, but didn't really materialize. That slide in the markets was way deeper. Again, it's about the relativeness, not the absoluteness. So let's start to look for a top somewhere late next week or middle of the week after that, which matches very nicely with the wave counts we're tracking. Because if that is the case, then we might indeed be looking for 3, 4, and 5, okay? Something like that. And that will then make me upgrade the wave count to 1 degree lower. So then we have tops for wave 1, we get the pullback for wave 2, potentially, okay? Unless we really start running, break instantly above 4,600, then this fifth wave is going to run much quicker and faster to 4,800. And then we will be looking for this fourth wave already going into October. So this could be the fourth wave, okay? It could go quick, right? This could be the fourth wave. Doesn't have to be. This second wave, if it's going to be happening, this second wave can last, of course, for a while. Second waves can last for a long time to make sure everybody get wrong-footed before the third wave happens. But let's first deal with this 4-5 setup, potentially. As I showed you here, 4545 setup. Let's first try to nail that one down. Once we get there, we'll then see if this was only wave 1 of 5 or all of 5. As long as we hold above 4465 on the S&P 500, we're looking good. As long as we're holding above 15,250-ish on the NASDAQ 100, we're looking good. And again, we have now reasonably reliable buy signals. This is a pretty good buy signal. Okay. Market breadth is turning positive. So now the bulls are in charge. And therefore, we can conclude that the stock market bulls appear to be back. Take care, trade safe, and I'll catch you all next week and enjoy your 3-day weekend. Bye.